event that they're unable to get out of bed each morning, go to work, earn that next paycheck, or even be able to provide them a benefit if your clients were to be diagnosed with, a critical illness like cancer or have a heart attack or stroke. And before I dive into products and how you can do this for your clients, a surety can help protect such emergencies or quote-unquote surprises, as I like to call them, because we have been and we continue to primarily focus, especially in the middle income, and we have been for decades. For those of you on the line today who aren't familiar with a surety, let me give you just a high-level overview. We have been around for 127 years. We have specialized in life, health, and disability insurance, and we are located right downtown in Lincoln, Nebraska. We do have a broad portfolio made up of about 18 products, and in fact, the first policy that a surety ever wrote back in 1890 was an accident-only DI plan. Now, this was okay back in the 1900s because we know that most people would pass away from major accidents or injuries. However, nowadays, thanks to modern technology and medications, people are surviving those accidents. However, they're living with disabilities. So within today's presentation, I'll discuss with you the value of adding income protection and critical illness protection to life policies that you currently sell to your clients now. I'll also be able to show you how to overcome a couple of objections that you might hear pertaining to these, and just how easy of a process it is to add these riders to the life policies that you're already familiar with, along with a couple sales ideas on bringing up the need for income protection and critical illness. To start things off, when your clients hear the term disability, what do you think they picture in their mind? It might be somebody in, a wheelchair, maybe it's somebody on crutches, or somebody that can't walk, right? Well, that's not always necessarily the case. I'm sure, some of you on the line today might already know this working in this industry, but I want to show you this visual to really drive home the fact that 90% of disabilities come from illnesses, not injuries or accidents. And as you can see here, the top three, musculoskeletal, cancer, and cardiovascular, account for over 50%, and that is huge. So even though your clients might not think they're going to end up in a wheelchair for the rest of their life, there's numerous conditions that can cause them the inability to go to work every morning and earn that next paycheck. LIMRA did a study a couple years ago that I really like and I want to share with you. And what they did was they asked several clients why they don't have disability insurance, and those clients responded that their agent hadn't told them about it. On the other hand, when agents were asked why they hadn't sold disability or added it to the life products that they currently sell, they responded because their clients hadn't asked them about it. So in turn, this means that there's a huge opportunity for you to start that conversation, because anybody that you work with, any of your clients that wake up every morning and go to work, essentially they do need to protect their income. And you could do it simply by asking, questions when you're already in that meeting with them. Maybe it's asking them what is their most valuable asset that they want to make sure that they can grow and maintain, whether it be on a monthly basis or a yearly basis. Another question that you can start by asking them is, how can you make sure that you're going to meet your financial objectives in both a premature death or even a health setback, like a critical illness or a disability? This leads me to my next point, and that is, why would you want to do it and what's in it for you? Well, what is the most important plan in your client's minds? What do you think that is? Well, it's the one that is enforced when your clients need it the most, right? Well, with disability and critical illness riders that you can tack onto life products, you can help protect your clients against not only a premature death, but also help in the event that they were to suffer from a critical illness like cancer, heart attack, or stroke, or even from a disability that prevents them from earning that next paycheck. This is especially key in the middle market, and it is so important that we help protect our clients with such a risk, because they rely so heavily on that income in order to not only maintain the lifestyle that their families are used to, but also be able to grow those financial goals that they've set for themselves. Munich, which is one of Assurity's reinsurers, did a study a couple years ago that I really like, and what they did was compare the number of millions of people in a certain occupation class to those who actually had disability coverage. What they found was that there's over 75 million people that accounted for the middle income. However, less than 10% actually owned an income protection plan or a rider. What this means for you is that, not only is middle income a huge opportunity for you, but it also accounts for the largest demographic out there. Everyone on the line today does a variety of different things, and each of you are very successful because of it. But one of the most important things that we have, I think, is the ability to help our clients protect their income so the rest of these things can continue to grow. If we don't have our income, a majority of these things aren't going to stick around for very long once that income goes away. We need income to secure our financial plans and continue to grow towards financial success rather than taking a step back. Income protection should be a major part of your client's financial portfolio. And without income, their auto insurance would terminate or even lapse. They wouldn't be able to fund their retirement plans properly, or even their life insurance policies might lapse. And think of all the things that would happen if they were to pass away from a premature death, or they weren't able to wake up in the morning, go to work, collect that next paycheck on payday. This is why the discussion for income protection is so important, because you wouldn't want your clients to have to borrow from their financial portfolio or take out a second mortgage on their home because they don't have any income coming in, simply because no one's brought up that income protection conversation to them and what all it can do to protect them. Instead, what you can do is help your clients by tacking on a monthly disability rider to their whole life or their term plans that fit within their wants and their needs and their budget. So if they're too sick or hurt to go to work, and most of all, their financial assets that they've worked so hard to build up can continue to grow. What do these riders look like? Well, as you can see up here on the screen, your clients can get up to a $3,000 monthly benefit if they were to be considered totally disabled and not able to go to work each day and earn an income. One nice thing I love about this is that the underwriting process is so simple, and all you have to do to add these riders is simply check a box on the application and put in the amount that you or your client are looking for. Super simple, super easy, and you can add this to not only both of our term products that we have, but also our whole life and our universal life. Next rider here that we have is the critical illness benefit rider. You can get between, depending on the product, $20,000 all the way up to $100,000. Now the $50,000 on the screen here is pertaining to our term products, but you can also add this rider to our whole life or our universal life. And I don't know about you, but I'm a pretty visual person. And this is what our critical illness rider can help protect. We do have a 3-category approach that we use here at Assurity. What I mean by that is, let's say that you, sell your client a term product, for example. You want to help protect in the event that they were to be diagnosed with cancer, have a heart attack, or stroke. I name those 3 because those are the most 3 that we get claims on. So you're meeting with your client and you tack on a $25,000 critical illness rider onto their term policy to help protect their mortgage. A couple of years later, let's say that they get diagnosed with invasive cancer. So what will happen is Assurity will send them a lump sum check for $25,000. They continue to pay premiums because they know the value of the critical illness benefit, and a couple of years later, they have a heart attack and they survive. What Assurity will do at that time is pay them another lump sum check of $25,000. They continue to pay the premiums, and a couple of years later, they hit the bad luck trifecta, and on their way to work, they get into an accident and they become paralyzed. What Assurity will do at that time is send in their 3rd check for $25,000. So in total, they've received a $75,000 benefit simply because they added this rider onto their term policy. And another huge factor for this that I want to mention is that both of these riders pay in addition to the death benefit. They're never going to take away from that original face amount that you have sat down and come up with your client. They are a separate pool of money. And how can you help your clients get protected not only with their most valuable asset, which is their ability to earn an income, but also be able to provide them with a lump sum benefit check in the event that they were to be diagnosed with cancer, have a heart attack or stroke? You can add these riders to a majority of our life products and be able to help better protect your clients. Now, whether it be mortgage protection that you're selling, you could preface it as, even the new kind of mortgage protection. Because if you tack on a CI or a DI rider to that individual and they were to suffer from a disability or a critical illness, now they're able to continue to pay for that mortgage and stay in that house that them and their family love and have been in the last couple of years. And nowadays, we know that people are living a lot longer, and they're living through situations that a couple decades ago they would have passed away from. So these riders really give a client a chance to focus on what's important, which is recovery. And they can do that all without having to worry about the financial burden on their shoulders while they do it. And again, I really want to hone in on the fact that these are, what we call living benefits, because you don't have to pass away in order to receive those checks. And I want to show you one way that this could work. So if we look at here, we have a younger family. They have a couple kids. Husband's 35, wife is 34, and they have a $200,000 mortgage. I did go out and I ran a quick monthly payment calculator for a 30-year mortgage and found out that basically it would cost around $810 a month. Now that was in Nebraska, so it could be a little bit higher, a little bit lower elsewhere. Now we want both Jake and Ashley to have $200,000 worth of death benefit to help cover the entire cost of the mortgage. As we can see, Jake's monthly premium is right around $47 a month. Ashley's is right around $31. And we know that in the event that anything were to happen to either one of them, that the mortgage would be taken care of for just under $80 a month. This is a great cost-effective solution to help protect both Jake and Ashley, who are the income earners of the household. Now, the husband and the wife can both be protected. Now, what happens on the flip side if one of them were to be diagnosed with, let's say, a critical illness, or what happens if, Jake or Ashley lose their job? How are they going to help be able to afford that mortgage? So basically what I do to solve this problem is I would write them both $200,000 of our non-med term to help cover their mortgage. And then what I would do is tack on a $1,300 monthly DI rider, because if you remember, the monthly mortgage payment was right around $810 a month. So if we tack on $1,300, they're not only going to be able to pay for the mortgage, but they're also going to have a little bit left over for those other monthly bills that they have. Maybe it be credit card, auto, what have you. Then what else we can do is tack on a $30,000 critical illness rider that will pay a lump sum if they were to be diagnosed with cancer, have a heart attack or stroke, or any of the other covered conditions that you previously saw. So with that, I can get all of that protection, and it only costs about $161 a month. So it's very, very affordable. Now by adding these, first off, the client's going to be better protected, but also you as the agent is going to be able to provide additional coverage and additional value. Our non-med term policy is easy for a consumer to understand, and in turn makes your job as an agent a lot easier. Also, don't forget that you can also tack these riders on to our whole life plans and our universal life plans as well. So with mortgage protection, here's how I would position it. You have mortgage A and you have mortgage B. Mortgage A is their current mortgage, where if they're healthy, they're living and working, they continue to pay for the mortgage. If one of those main breadwinners dies, they still have to pay for that mortgage. If one of the main breadwinners becomes disabled, they still have to pay for the mortgage. Or if one of them becomes diagnosed with cancer, has a heart attack, or any of the other covered conditions, guess what? They still have to pay for that mortgage. However, if they decide to go with mortgage B, which is the same mortgage, so they don't have to change their mortgage company, we're just going to show them basically an additional $80 a month with this policy. And what we're talking about is if they die prematurely, the mortgage would be paid. if they were to be disabled and unable to go to work and earn that next paycheck, they're not going to get kicked out of their house. They're going to receive a monthly benefit check of $1,300, and that's going to be able to cover that mortgage and some other additional bills as well. And likewise, if they were to be diagnosed with cancer, have a heart attack or stroke, guess what? CI is going to kick in, and they're going to get a lump sum benefit check to help not only pay for the mortgage for a couple of years, but also maybe some other expenses as well. So which one would you prefer, Mortgage A or Mortgage B? Now remember, Mortgage B comes with a lot more protection in the event of an unexpected event. So this is how I would position it. Very simple analogy. Find out what your client's monthly mortgage is. Great way to incorporate CI and DI into the sale. The truth is, that we all know somebody that has been affected by a critical illness. For me, it was my aunt. She battled cancer for several years, and unfortunately, she did pass away at the early age of 52. And I know for a fact that if she would have had a critical illness policy or even tacked on a critical illness rider to her life policy, it would have helped pay out for not only the medical expenses, but also the mortgage and the experimental treatments that she did. It could have also helped with the travel expenses because she did live in a small town. She lived on a farm where the nearest doctor was about an hour and a half away. And I remember several times that she would need to go to Omaha for treatments, which was even a little bit further than Lincoln. And she could have used some of that money to take her family on a trip or even used, however she sees fit. But we all know that there's a need for this product because unlike in the 60s, 70s, even 80s, people are now surviving from such critical illnesses, but they're surviving with consequences of those financial burdens. So critical illness riders can help offset the cost of even deductibles, co-pays, mortgage bills, and other expenses that incur. And one way that you can bring it up to your clients is asking them simple questions. Ask them how they would rank these 5 assets that you see in order of importance to them. Some of them might say that their most valuable asset is their health or their home, but we all know that these would be affected if we couldn't earn an income to pay for them. We insure things like our house, our health, our cars. Some people even insure their cell phones. And our income purchases all of these things that we value, right? Well, if we pay for all of these with our income, then we need to also make sure that our income is the first thing that we insure. Another way that you can bring it up is, if you have an office or you have a desk that you meet with clients, put a sticky note that is facing them that says something in the effect of, make sure I talk to you about an important topic today. Assurity, just like any other carrier, has been in the disability market and tacking on disability riders and critical illness riders for over 125 years, and we designed plans that were priced and aimed towards that middle income. Another great way that you can bring up the discussion is how Chris Carlson does it, and he does a great job by asking clients one simple question. So whether you've never sold disability or tacked it on as a rider, or maybe you're just looking for a new way to bring it up to your clients, start by saying this. And he says, Mr. or Mr. Client, suppose I could give you something worth $250,000, something worth $20,000, and something worth $1.5 million. Which of these would you protect if you could insure their value? What I mean by these is your house, your car, and your income. Your house is approximately worth $250,000, and you have homeowners insurance for it. Your car right now is worth about $20,000, and you have full coverage protection on it. Between now and age 65, if you never get another raise and never have any additions to your cost of living, then over the course of your career, you're going to make $1.5 million. Now think about how many cars that you could purchase and never get up to that $1.5 million threshold. Yet there are so many people out there that have car insurance, and what they really need to be doing is protecting their ability to earn an income. And one way that they can do that is by tacking on a monthly DI rider to their life policies that they have. Now with everybody on the line today, my challenge to you, reach out to Kathy, Kelly, and Melissa over at Premier. Work with them to make sure that the next client that you meet with has the adequate protection in place in the event that they were to suffer from a disability or even a critical illness. You know, because a disability can strike at any age, for any reason, and without warning, so make sure that your clients are protected. Plus, this process is so simple to add on these riders. All you have to do is on the actual application itself, check a box of which one you want to add, or maybe it's both, and then put in the dollar amount right next to it that you want to add. Super simple, super easy. Also, one additional perk of adding, you know, critical illness or income protection to life policies that you sell is because you get to go on some pretty amazing trips that Assurity hosts each year. And let's face it, who wouldn't want to go to the land down under, right? Well, if you want to know more about how to qualify for this or any additional questions, reach out to Kathy, reach out to Kelly and Melissa over at Premier and talk to them about your next client that you're meeting with to make sure that you can bring up that discussion so they can understand that value. With that being said, I want to thank everybody for your time today and hope everybody has a great rest of your Tuesday.
Hey, Taylor, thanks a lot. You gave a lot of great information, a lot of great sales ideas. I am opening this up to see if anyone has any questions. Right now I did type in there if anyone had anything to let us know. We can answer your questions now. Otherwise, you can give Premier a call at 1-800-365-8208. Ask for a life marketer. And anybody, Mark, Melissa, Kelly, or I can help you in any directions that you have or any questions that you may have and run some options for you and give you some quotes. So I don't see any questions up there just yet. So everybody have a great day and give us a call. Thanks, Taylor. I appreciate you as always for helping us with this great webinar. Take care, everybody. Have a great day.